Okay, so good morning, V. Thank you for this opportunity and for the interview. Uh, would you like to start by telling me a bit about yourself, telling the audience about yourself and the about what you do?
Sure. I am a trader, right? I started in Chase, Manhattan, London, which later became the bank that which was the bank that bought JP Morgan later. So it became JP Morgan Chase. I worked in London for them, in Singapore, in Seoul, in New York. Uh, so yeah, four centers for JP Morgan Chase. Then I joined. I started my hedge fund with my boss. Started a hedge fund with my boss. It was a global macro hedge fund, and then later I returned to banking. To trade in the bank at Deutsche Bank Singapore, and then finally I work at Morgan Stanley Hong Kong. And then since then, this was some years ago. Since then, I started my own trading academy. It was first started to provide training to professional traders in institutions, and then I found that there was a gap between professional traders and the retail trading sector. So I decided to adapt the programs for retail traders as well. Yeah, so now this is what I do. I do still my main the thing that occupy me the most is trading, but I also curate training programs for both retail and professional traders.
Great, awesome. Right. So the topic of the day is like how Malaysians can get started on trading on the international stock market, right? I think it's a topic that's quite interesting because I think a lot of Malaysians want to get into international trading but not sure how to start. So first question would be like, how does trading overseas differ from trading locally in Malaysia?
Well, okay, so I have to give you the context, right? Like I wouldn't be very familiar with the trading in Malaysia because I left the country after I went overseas for university and I started working overseas. So my experience of trading in Malaysia is just from when I'm overseas, right? It's just a little bit, just trying my luck because I think, I'm Malaysian. I should have a a very clued in view of what's happening in Malaysia. It turns out to be quite wrong most of the time. And I also traded some stocks early on before I went overseas for university. Of course, through my mom's account or my relatives' account, right? Like I give them opinions and then they do, and it didn't really turn out that well, right? But I think essentially the difference between international markets and Malaysian markets is that uh, Malaysian markets doesn't really drive international markets, right? We're talking about, for example, US markets. So US markets is the biggest, most liquid markets in the world. And what happens in US tends to drive what happens in other local markets. So by trading Malaysia is kind of almost like a derivative of the international markets, but also there are some idiosyncrasies within local markets, be it Indonesia, Malaysia, Philippines. There's always some local elements that most foreigners do not understand. So, for example, local politics, local regulations. And unfortunately, of course, this cannot be proven, but quite often in local markets, the flows are driven by insider knowledge and people who are connected, they know what's going on. Because as we know, the local markets are not as transparent. And even in transparent markets like the US, we have cases of massive fraud like Enron, right? Lehman Brothers. It's not fraud. It's irresponsible risk taking. So we have all these things even in the most regulated and most transparent markets. So I would imagine that it would be much more difficult to get real information, real transparent and honest information within local markets where the regulation is much less strenuous.
What would you say are some of the biggest advantages and maybe even the risks of trading on the international market?
Well, I think the advantage is that it's pretty much open to anybody with an internet connection and a brokerage account, a credible broker, of course, right? You have to be sure that your broker is trusted and regulated by a reasonable authority. But the advantage is that you can find, for example, we are talking about the US markets, right? Like we can find information on almost any of the companies that are listed, especially the big ones, right? You can get their earnings reports, you can get analyst reports, you can get a lot of information just by Googling. But of course, that doesn't mean that all that you read online is true. It's just that you can verify. It's much easier to verify. It's much easier to of course, as I said, there are cases of massive fraud where they publish fake accounts, they manage to fool the regulators as well. But this is the world that we live in. I think it's the cleanest of the dirty shirts in this world, where at least there's much better regulation, and also the 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 themes, I believe, is clearer because of more coverage and more news on it, right? It becomes for example, the theme that's driving the market right now is artificial intelligence, and you can find a lot of information. You can figure out what company is going to benefit from this by doing a lot of research online, right? And because also of the fact that the markets are huge, there's a lot of experts doing your work for you. So you just need to find credible experts and read what they say, right? So in smaller markets, it's hard to discern who are the real experts. Of course, I don't mean to offend anybody who believes they are an expert in local markets, but it's not so easy to figure out what, because they're not under as much scrutiny as the ones that are trading the bigger markets. Yeah.
Is it rather difficult to enter the international stock market?
Difficult. I think we live in a world where is of course, when I was growing up, it was extremely difficult to make a trade. You actually need to call the broker, and then you have to have broker accept your account. You have to have an account big enough for them to order to pick up your calls. Those, of course, I may look very young to you, but it's a long time ago, and the world has changed by a lot. So now we have internet trading accounts where they take very small deposits, where it's a good place to start, right? Where you can just try with a few $100 and learn the trade. But is it difficult? I think it's only difficult if you don't bother to seek out the information. So, for example, your site iMoney, that you even have offers as to what brokers are credible, where to sign on, what are the best deals around, and we there's a lot of access to information. Of course, you've got to find in a world of information overload, you have to find credible sources of information. But if you find trusted sources of information, then it's quite easy. It's just a matter of opening the account, getting verified, getting KYC, which is making sure that you are who you say you are, and then you deposit the money and you start from there. And even then, let's just say you are a high school student, you're still in school, you're very interested in markets. You can open a demo account, right? You can open a demo account. It's very simple to use. The interfaces that are available in various brokers now, it's not so complicated, and it's good to try from there. And I think it's not difficult. I think it's only that financial professionals, they try to make the things seem very complicated because they have a vested interest, right? If you think it's very complicated, then you leave it to them, and then they can charge you a fee for doing something that is fairly simple to do. But of course, as we always say at TrackRecord, is that trading is a simple process, right? So to learn trading trading is not that difficult. It's simple, but it's not easy, right? It's very easy to lose money, right? So making money is not that difficult, but losing money is infinitely easier, and that's why most people who dabble in trading, they tend to fail in the beginning. But that's the case with most endeavors that is rewarding over the long run, right? It's not going to be so simple. Otherwise, all of us will be traders, all of us clicking away, not really having a real job, right? Yeah.
Let's say for beginners who are trying to get into like the international stock market, what would be some signs they should look out for, or what advice can you give them to get started?
Well, I think yes, to get started, first you have to learn more about it, right? So let's just say talk about US markets, I think that's the one that most people are uh, uh, familiar with because they speak English, as most of us do, and the information is very fairly distributed, well distributed, very readily available to an average person with an internet connection. Get started, I think you have to always find credible sources of information, right? So how did I learn about stocks trading? I started out trading other stuff, right? Trading currencies, trading interest rates, which sound a little bit complex for the average person, but it's around essentially eventually it comes down to a few things. But say for stock trading, uh, Google Warren Buffett, read up on his philosophy, and he's I think that's one mistake that most people make, right? Most people try to be smarter than the established experts without even having any experience. So Warren Buffett is the best investor of our time. And in fact, probably for years to come, we will never see someone like him again, right? And his philosophy about investing, about trade, about investing, about buying stocks, about keeping stocks, about holding for the longer term, he publishes this freely, right? If you go onto the internet, you can Google his newsletter to his shareholders that he publishes every year, that he speaks at a conference every year. And if you read through all his newsletters, and you will start to have an understanding of his philosophy, and that's a great place to start, right? I believe I still remember when I was starting out years ago, I was thinking about investing in stocks. I wanted to make a decision. I was like, it's a very simple decision. I could just buy Berkshire Hathaway, which is his company, and leave it to him, right? Because he invests through that vehicle and that has compounded through the years many, many times returns, right? And every of his shareholder has made off really, really well by investing in him. And it was conscious decision. Did I think I could do better than him? I thought, yeah, I'm young, I'm dangerous, right? I'm going to do this better than him. Of course, I tried. I think ultimately it would have been a much easier decision to just delegate my responsibility, this investing responsibility, to him. But I think the audience right now is at a juncture where he is now 90 something years old. It's almost the end of his life, right? So you cannot really delegate this responsibility to him, but his philosophy is still readily available online. So he's just one of the many, right? There are many other great investors of our age, Ray Dalio, for example, and you can Google, right? The worst thing you can do is actually to Google online and then fall for all those get rich quick schemes, people who promises returns beyond rational, just irrational returns, right? They say, oh, I can do this better than Warren Buffett. It's very, very unlikely, right? And a lot of people will fall for so-called trading gurus where their professional job is not trading, right? They don't trade for a living, they teach for a living, they're motivational speakers. Of course, I don't speak for all of these trainers, but most of them, they are professional speakers who really decided that, if I speak about leadership, I can make X amount of money. But if I speak about finance, I speak about trading, I could make gazillions more. Why don't I just read a book and watch a YouTube, and then I'm suddenly a teacher online, right? And that's the problem with the information overload, right? Because it's now very easy to set up something like this. Of course, you can also say, Track Record Trading Academy is also some dude, right? It's just some guy, right? He also, but the difference is I'm a professional trader, right? So I've done this for years, and I've adapted training programs that were given to traders in bank, professional senior traders in banks and institutions, to the retail side. So what I mean is that don't just fall for any first video that you see. Don't fall for false promises, right? There's a lot of information, but the credible sources, it's easily verified, right? For example, start, as I said, with Warren Buffett, and this would be something that I would do if I was given a chance to do it all over again, right? I would read about them, read about the philosophy, and there's a lot to learn about trading. And I think one of the mistakes that most people make with regards to their financial status, with their financial well-being, is that they delegate this responsibility to so-called professionals, right? And it reminds me of one of his quotes. I believe is attributed to Warren Buffett as well. It's like Wall Street is the only place where people in Rolls Royce go to get advice from people who take the subway, right? So basically, you're the guy who is successful in your business, and suddenly you have a lot of money, and then you go to the bank to get advice from the guy who takes the bus and the subway to work, right? And they are just still starting out. And I believe it's actually an endeavor that even if you learn and then you decided that, of course, it takes a lot of time to get to become proficient, to become an expert at it. But even if you decide, oh yeah, I really don't have the affinity for this, but it helps you decide which advisor, which financial advisor that you give this responsibility to, and you are able to choose better, right? You can talk to them and you realize that most of the time, of course, I'm not saying all of them, most of them, they're selling you products because it generates fees. The primary motive is not to make you richer. The primary motive is to generate fees so that they get paid, right? So that's the problem that we tend to have in the financial industry, right, where the incentives are not quite aligned. So it's always good to learn so that you can choose better, even if you decide not to do it. But it's not something that you should learn after you have money. I think you should. In fact, I believe it should be taught in school about risk taking, about how to manage your money. And it's great that we have websites such as yours where you advise people. I think people make the most fundamental, most basic mistakes in their financial management, right? So I think you know this better than I do, Jordan, because I'm sure you come across many people who don't know how to manage their money. But over the long run, it makes sense to learn because it doesn't take much more than time and effort from you. And the rewards are asymmetric. If you do it well, you do it right, you can make your money work for you so that you really don't have to go to work for more money. Yeah.
How much would you recommend putting into foreign investments for someone who's just starting out in that?
I think this is a question that get asked all the time, right? I think most people think that it is not worthwhile to start with something that don't matter to them. But you don't really risk money in the first few days of doing something that you have never done before, right? You will not say, oh, I'm going to have a concert and play piano when you just learn it for 3 days and then charge money and then pay for the venue and hope people will come, hope people will come, right? Yeah, yes, if when you're starting out, try with as little money as possible. That makes sense. Of course, little money to you and to me and to some other person is very relative. It depends. So use always trade and invest in money that you can afford to lose, right? You can and in fact, as I said, alluded to earlier, you don't even need to risk any money to begin with. You can just open a demo account and then start off from there so that you get used to the system, get used to knowing what's going on. And it's a lot easier to make objective decisions when not a lot is online, right? Not that you'll find the trick to trading if investing is eventually you need to make objective decision based on the information that comes in, regardless of how you feel about it, regardless how painful it is for you to make these decisions. And it's a lot easier to do so when you don't feel the pain of this finance burden, right? Financial burden. And you cannot start from the beginning from 0 to 100 just like this, right? You have to scale in and get yourself trained. And it's a lot about training your muscle memory to make the right decisions at the worst junctures of your trading journey, right? And it's very easy. Trading, investing is very easy when everything is going well. It gets extremely difficult when it starts to move against you, when you start to lose money, and you find that you cannot make objective decisions. So start with something that won't hurt you. Start with something that you are willing to risk, as your assumption is that it's kind of a form of tuition fees, right? It's a fees. Even someone like myself, I've been trading for years now, and when I use a new platform, I find myself often that it's still not it's still possible that I click the wrong thing and make the wrong order, put the wrong orders and make simple mistakes like this, and it costs money, right? But that's me. I'm a professional. I've been using different platforms. I've seen many different interfaces. I've even helped design interfaces. But an average person coming in, they will most likely be making mistakes in the first few weeks, if not months. So don't risk all you have and then hope to. And a lot of people try to do that. They think, it's got to make sense. If I'm going to put in a few $100, it doesn't make sense. I don't pay attention. Yes, if you find that you're not having that kind of discipline, then increase it to a certain level, to the level where you find that it matters, and you make the right choices in not have the skin in the game such that it makes sense for you to invest the time, but don't have so much until you cannot even concentrate. So that's a rule. If you find yourself looking at the markets all the time, like looking at the screen, updating the thing, you have too much risk on. You have to scale back, right? Because it shouldn't be consuming your life. So the purpose of investing is not to make it a 24-hour thing, but it's a long run thing. Because for retail traders especially, if you try to compete in the short term with professionals, you have almost no chance, right? It's almost no chance because you don't have the technology, you don't have the news, you don't have the experience, you don't have the resources that professionals have. So how do retail traders win? You have to win with the focus on the long run, because most professional traders, they tend to have objectives on a quarterly or annual basis. So sometimes they make decisions that are very restricted by time, right? Whereas the retail investor, you can be much more objective. So I'll give you an example, right? I think since this is the last question, I think we should end on this note. Where a lot of people think investing, trading is beyond them. It's not something, but I think everybody knows about Google, right? It's been years since we used Google. When Google came out, when you got the Gmail, I still remember feeling so excited because it's the best interface of an email at that time, right? And even now, it's still the best interface that I've come across. And everybody use Google. Google is so prevalent until it became a word, right? We don't use the Google browser, Google search engine to search. We just Google. But to find someone to have benefited from this financially is very rare. Everybody knows that Google is dominant. Nobody uses, some people use other browsers just for the heck of it, right? They just, I want to be different. I'm going to use Explorer, whatever the case, Edge. But the Google search engine is super dominant. And you know this years ago, but did you benefit from it? Probably not. For people that have come across who bought Google stocks, they probably took profit after 1 year when it goes up 50%, or wow, it's great, maybe 100% I take profit. But if you held Google from the beginning till now, you would have made a lot of money. And you really need, as a retail trader, you really just need to make a few of these great investments through time, right? Through the years. And it's not difficult. I mean, it is difficult. It's not unimaginable that you can stumble upon this gem a few times in your lifetime, right? Google, Apple, for example. I personally, I don't use Apple products, but when I saw how dominant it is, how people who use Apple refuse to use anything else, although Apple charge them more, and the charges doesn't work. The charges break after a while. Everything is more expensive, but it's so cool to these people that they use Apple forever. The decision to buy Apple stock is quite a short leap of logic from there, right? If it's so dominant, it's making so much money, and everybody who use it refuse to do anything else but use it forever. Yeah, so I think within your everyday experience, you will come across products like this, experiences like this, where you think, if I was running this company, I'll be raking it in. And you can be running, you don't need to run this company, but you can be invested in these companies. That's the beauty of transparent liquid markets in the US, right? The products are used every day. You know exactly what's going on most of the time. So I think, that's the best way to begin, right? To see what around you is products that are used very commonly by everybody you know. They're dominant, they're making a lot of money, and that's a great place to start.
Okay. Thank you very much. That should be a wrap.
Thanks, Jordan. Take care.